The systemic financial collapse would happen like this. People are so traumatized by what's happening with their homeowners insurance that they pull back on spending. That slows the economy down, tips it into a recession. And there are so many over-leveraged sectors out there that a recession leads to a brutal equities bear market, maybe a banking crisis. It's not clear at that point what is the fix. You know, if bailing everybody out makes the dollar tank, then how does the government fix that? They've got to raise interest rates to protect the dollar, but then that craters a bunch of other over-leveraged financial institutions, which forces another bailout. You know, and at some point, people just give up on the whole process.
You're watching Silver News Daily. Subscribe for more.
Did you know the collapse of the insurance industry could spark an economic disaster so massive it makes 2008 look small? And here's the twist. Experts believe silver could be the unexpected winner in this chaos. It sounds wild, right? But stick with me, because in the next few minutes, we'll uncover why silver prices are poised for a historic surge as financial panic erupts. This is something you can't afford to miss.
Yeah, well, to understand today's world of insurance and real estate, we have to go back to post-World War II America and look at a couple of huge mistakes that we made or that we've been in the process of making since then. And one is tens of millions of Americans have been moving to the Sun Belt, whether it's the Southwest in the U.S. or the East Coast in Hurricane Alley. And we weren't paying attention to the fact that natural disasters are frequent and cyclical in those places. You know, you have fires in Southern California and you have hurricanes in Florida and the rest of Hurricane Alley. And the more people we move there, the bigger the potential for disruption when these things hit. You know, Miami is guaranteed at some point in the future a direct hit from a Cat 5 hurricane, and it's going to be brutal when it happens. And these fires that keep happening in Southern California and the rest of the Southwest, those are things that are natural and recurring. Now, at the same time we've been moving all these people into dangerous places, we've been debasing the currency via excessively easy monetary policy. And that makes financial asset prices go up. And houses are basically financial assets because you borrow money to buy them in most cases. So home prices have been soaring at the same time that more and more people are moving into these dangerous places. And that puts the insurance companies in a big bind because they're on the hook for replacing these multi-million-dollar houses when they burn down or whether they're destroyed by a hurricane or whatever, which means they have to raise their premiums. And things are getting so bad now.
The insurance industry, an essential pillar of our economy, is facing an unprecedented meltdown. Let me paint you a picture. Insurers across the U.S. are pulling out of high-risk markets like California and Florida, leaving countless homeowners without coverage. Why? Because skyrocketing costs from natural disasters like wildfires and hurricanes are making it nearly impossible for companies to stay profitable. Just last year, the number of states where insurance companies were operating at a loss hit an all-time high. And these aren't small losses. We're talking billions of dollars wiped out in claims that are becoming too frequent and too catastrophic for insurers to handle. But here's where it gets even more concerning. Without insurance, properties in these regions become essentially worthless. Who's going to buy a house that can't be insured? And for those who can still get coverage, premiums are reaching crippling levels, forcing many to choose between keeping their homes or their financial stability. This crisis isn't just about homes. It's about a systemic strain that's spreading like wildfire, no pun intended, across the economy. Now you might be thinking, how does this ripple outward? Well, here's the scary part. When people can't insure their homes, they can't sell them. This locks up the real estate market and drags down property values. It's a financial disaster waiting to explode. People feel poorer. This is what economists call the reverse wealth effect, and they pull back on spending. The less they spend, the more the economy slows. And given how fragile our financial system already is, even a small slowdown could tip us into a full-blown recession. But it doesn't stop there. Insurance companies, which are massive players in the financial world, also manage trillions of dollars in assets, including pensions and retirement funds. If they collapse under the weight of this crisis, the fallout could spread to every corner of the economy, much like we saw during the 2008 financial crisis. The question is, how close are we to the tipping point? And more importantly, what happens when the panic starts spreading? Stick around, because in the next segment we'll explore how this crisis could trigger a historic surge in silver prices, a lifeline for those seeking refuge in these turbulent times. And hey, while you're here, make sure to subscribe to stay ahead of the chaos unraveling in the markets.
And I should say, it's not because of climate change. It's not because any of these things are becoming more and more frequent necessarily. It's because people are moving into these places, which magnifies the danger and the cost of these recurring natural disasters. So yeah, the chart we have up now shows Miami's home prices. And you see that I'm eyeballing it, but it looks like they're about twice as high as they were at the peak of the real estate bubble in the 2000s. So you've got a massive amount of extremely expensive real estate right there, just waiting to be impaired and or destroyed by the next big hurricane. And with what's going on in Los Angeles right now, it's brutal. They've got high winds, which are spreading fires. I'm not sure anything is still burning now, but they've been burning for the last couple of weeks. And they've got a record number of houses that have burned down. And it's not just, one category of house. It's Pacific Palisades, which are extremely high priced, and other places which are more modest. They're all, they all burned down in the fires that just happened. And so what's happening with the insurance companies is that they're either raising their rates for homeowners insurance on both coasts to a level at which they can make money insuring all these incredibly expensive houses in places with frequent natural disasters, or they're just pulling out of those markets altogether. So they're leaving homeowners with a big problem in a lot of cases, where even if they can get homeowners insurance, it's so expensive that it's debilitating. They can't keep their house if they insure their house, or they can't get insurance at all, which means a lot of houses are uninsurable and therefore unsellable. And we're talking tens of thousands, if not hundreds of thousands of people on both coasts who are in this kind of a position where they've got extremely expensive real estate that they can't insure.
This insurance crisis isn't just a problem for homeowners. It's a ticking time bomb for the entire economy. Let's break it down. When people lose access to affordable insurance or are left with uninsurable properties, it starts a chain reaction. First, the real estate market freezes. Homes in high-risk areas like California and Florida, where wildfires and hurricanes are rampant, can't be sold. No insurance means no buyers, which means property values plummet. Now think about what that does to the broader economy. Real estate is one of the largest sectors, and when it suffers, the ripple effects are immense. Construction slows, home improvement stores see fewer customers, and banks take a hit from a surge in mortgage defaults. But it doesn't end there. As homeowners feel the pinch from collapsing property values, they stop spending. Economists call this the reverse wealth effect. When people feel poorer, they tighten their wallets, pulling back on vacations, luxury goods, and even everyday purchases. This slowdown in consumer spending, which makes up about 70% of the U.S. economy, is like pulling the rug out from under our already fragile financial system. And with so many sectors hanging by a thread, it's a perfect storm. Take the stock market, for instance. Over-leveraged companies relying on high consumer spending could see their earnings tank, leading to a sharp decline in stock prices. Think back to 2008. A downward spiral like this could send shockwaves through global markets. Now here's where it gets even more alarming. Many regional banks are heavily exposed to real estate and commercial debt. If these properties lose value or default spike, these banks face the very real risk of collapse. This isn't just hypothetical. Remember the banking crisis in 2023. It wouldn't take much to trigger another wave of failures, forcing the government into yet another round of massive bailouts. But here's the catch. Those bailouts come with a price, potential hyperinflation and the debasement of the dollar. And when faith in fiat currencies erodes, where do people turn? That's right, precious metals like silver and gold. And silver, in particular, is poised to shine brighter than ever in this chaos. Stay tuned because in the next step, we'll explain why silver isn't just a safe haven, but an undervalued asset with explosive potential in times of crisis. And before we dive in, let me ask you this. Do you think the government has a plan to prevent a crisis like this, or are we watching the system unravel in slow motion? Let me know your thoughts in the comments. And don't forget to hit that subscribe button to stay ahead of the storm.
That chart is from Charles Hugh Smith, by the way, who's doing great work on this subject. And it shows how tough the market for real estate or for real estate insurance is becoming. You know, insurers in a growing number of states just can't make any money writing policies on houses. And that leads them to do two things. One is to raise the rates, and the other is to just get out of those markets. And this kind of illustrates how dependent we are on something that was always just kind of background for most people, which is insurance. You know, so much of a modern economy requires insurance to function because you can't borrow money unless there's some guarantee that the people you're borrowing from are going to get paid back. And your insurance is a big part of that guarantee. You can't own a house. You can't run a business. You can't have a car unless you can insure it. And the cost of all those variations on the theme of property insurance are going up. And the higher it goes, the more debilitating it is for big sections of the economy.
As the insurance crisis ripples through the economy, it's creating the perfect environment for precious metals to shine. And silver is emerging as a standout winner. Historically, during times of economic uncertainty and financial collapse, investors flock to hard assets like gold and silver to protect their wealth. Why? Because unlike fiat currencies, which can be printed endlessly, silver is a tangible, finite resource. It holds intrinsic value, making it a reliable hedge against inflation, currency debasement, and systemic risk. Now let's connect the dots. As the real estate market freezes and regional banks face collapse, panic will likely grip investors. When confidence in traditional assets like stocks and bonds evaporates, people look for something solid, something safe. And that's where silver comes in. In fact, this exact pattern has played out before. During the 2008 financial crisis, silver prices more than doubled in the following years as investors scrambled for safe havens. But here's the thing this time. The setup for silver is even more compelling. Not only is the financial system under threat, but global silver supplies are shrinking. Industrial demand for silver is surging, especially with the rise of electric vehicles, solar energy, and advanced technologies. At the same time, many analysts warn that silver production from key mining regions like Mexico and Australia is struggling to keep up. Combine this with the looming economic chaos, and you have a recipe for an explosive rally in silver prices. And let's not forget one key factor. Silver is still dramatically undervalued compared to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is historically high. This suggests that silver has significant room to run as markets rebalance. Simply put, when the storm hits, silver could see gains that far outpace those of gold, making it one of the most attractive safe haven assets on the market today. The question now is, how long can this undervaluation last? And will you be ready to act when the tide turns? Stick with us because in the next segment, we'll break down exactly why silver's industrial and monetary demand makes it a double-edged winner in this chaotic environment. And while you're here, let's spark a debate. Do you think silver will outperform gold in the coming economic storm? Drop your thoughts in the comments below, and don't forget to subscribe for more insights like these.
And so if they want to get out of it, they can't sell it. But if they stay in it, they're on the hook for the whole price of the thing when the next natural disaster destroys it. Now, with all of that happening, you get something called the reverse wealth effect, which is the wealth effect is basically the process by which when our stocks go up, we feel rich and smart and we're more likely to take a nice vacation or buy a Tesla or whatever. And that stimulates the economy. But the reverse happens when we feel poor and stupid, which is the way a growing number of homeowners on the coasts feel right now. And they, therefore, are a lot less likely to spend the way they would have otherwise because they've got this giant gaping financial hole in their lives in the form of their house. And that could be enough to slow the economy down to tip us into recession in the next year. And we're so financially fragile because we've been borrowing so much money over the past 15 or so years to get us out of the Great Recession that a garden variety recession could easily metastasize into something much more dangerous. So it could well be that homeowners insurance is the catalyst that pushes us into a recession that then turns into something worse than the Great Recession of the previous decade. And who would have thought that homeowners insurance would be the catalyst? Because there are so many other things that seem more pressing, like us drifting into World War III or inflation remaining ahead of the Fed's target range, forcing interest rates up. Those things seem like the more logical catalysts. But now, after the LA fires, it's completely possible that homeowners insurance in particular and real estate in general turn out to be the thing that pushes us into the next recession.
When it comes to safe haven investments during economic turmoil, gold has always been the headline act. But this time, silver might just steal the spotlight. Why? Because silver holds a rare dual role that makes it indispensable in ways gold simply can't match. Let's break it down. First, there's silver's industrial demand. Unlike gold, which is largely stored away in vaults, silver is a critical component in many of the technologies driving the future. Solar panels, electric vehicles, medical equipment, and even 5G networks all rely heavily on silver. In fact, with the global push toward renewable energy, demand for silver in solar technology alone is expected to skyrocket over the next decade. This means that while gold is primarily a hedge, silver has a real-world use case that keeps demand consistently high, regardless of market conditions. Second, silver's monetary value is just as compelling. Like gold, silver has been used as currency for thousands of years. In times of crisis, when faith in fiat currencies crumbles, both metals are seen as a safe store of value. But here's the kicker. Silver is significantly more affordable than gold. That makes it far more accessible to the average investor, especially during periods of economic panic when people are scrambling to protect their savings. History shows that when fear drives markets, silver tends to see sharper percentage gains than gold. In the 2008 financial crisis, for example, gold prices rose by roughly 25%, while silver soared over 70% in the following years. Now add to that the fact that global silver reserves are dwindling. Mining output has struggled to keep up with rising demand, and major production regions like Mexico and Peru are facing challenges in maintaining their output levels. At the same time, investor demand for physical silver, coins, and bars has been surging, with premiums on some products already reaching historic highs. This combination of industrial necessity and investment demand creates a unique dynamic for silver, positioning it for potentially explosive gains. Finally, there's the gold-to-silver ratio, a key indicator many investors watch. Right now, it's sitting far above its historical average, meaning silver is vastly undervalued compared to gold. When this ratio corrects, silver's price tends to rally significantly faster than gold's. Simply put, while gold will likely remain a steady safe haven, Silver's unique mix of industrial demand, affordability, and monetary value gives it the edge to deliver much larger returns. So, as the cracks in the financial system widen and more investors rush into precious metals, silver's time to shine could be just around the corner. But here's the big question. Will silver's dual role as an industrial metal and a safe haven asset give it the edge to outpace gold when the next financial storm hits? Let me know your thoughts in the comments and stick around as we dive into the historical patterns of silver surges during past crises in the next segment. And don't forget to hit subscribe. You won't want to miss what's coming.
About that. But Florida and Texas, which big parts of which are also in Hurricane Alley, are still attracting a lot of people for, good reasons in the moment, because they're well-run places with a lot of sunshine and reasonable tax laws, et cetera, et cetera. So they're better places to live than where a lot of people are moving out of. But the price of that is rising, more expensive natural disasters going forward, and the insurance problems that flow from that. Because one solution eventually, or perceived solution, is going to be that these states take over the insurance industry from private insurers who don't want to be there anymore. So you'll have a government homeowners insurance plan, which you have in a lot of states, but that doesn't fix the problem of incredibly expensive real estate being destroyed by periodic natural disasters. That just shifts the bill from one group to another. So it leaves the insurance companies don't have to pay off, but taxpayers do. And if you want to see a state go from well-run to badly run in a hurry, one quick way to achieve that is to have the state become the insurer of last resort for real estate. And Florida and California are in real danger of having that be their only available public policy option regarding insurance. And then boom, there's no way that taxes don't go through the roof when that happens. And regulations, because they will try to regulate their way out of these disasters, and that won't work either. So, that's one of the slippery slopes that we're on right now, that will make even well-run states badly run in the future. And it's not clear where we go when Texas and Florida are no longer good places to move to. It's that there aren't a long list of places that can hold that many people where people can move to. So we'll see. But it looks like we have more problems than solutions in the near term as far as insurance in Sunbelt states goes.
History has a way of repeating itself, especially in the financial markets. When the global economy is in turmoil, silver often emerges as a star performer. Let's take a look at some key moments in history to understand why silver could be on the brink of another historic rally. First, let's revisit the 2008 financial crisis. As the housing bubble burst and markets spiraled into chaos, silver prices surged from around $10 an ounce in late 2008 to nearly $50 an ounce by 2011, a staggering 400% increase in just a few years. Why? Because in times of crisis, investors seek refuge in hard assets, and silver, with its dual role as both an industrial and monetary metal, becomes a go-to asset for protecting wealth. But the 2008 crisis wasn't the first time silver proved its worth. During the stagflation of the 1970s, as inflation skyrocketed and trust in fiat currencies collapsed, silver prices climbed from just $1.50 an ounce in the early 70s to a record high of $49.45 in 1980. That's an almost 3,200% increase in less than a decade. What drove this incredible surge? A mix of runaway inflation, geopolitical instability, and increased demand for tangible assets, all factors eerily similar to what we're seeing today. Even more recently, silver showed resilience during the COVID-19 pandemic. When uncertainty gripped global markets in early 2020, silver initially fell but quickly rebounded, rallying by over 140% from March to August that year. This was fueled by a mix of safe haven demand and booming industrial use, as governments worldwide pushed stimulus packages and green energy initiatives. Now think about what's happening in 2025. Inflation remains stubbornly high. The U.S. dollar faces increasing pressure from ballooning government debt, and geopolitical tensions are mounting. Sound familiar? It's the same environment that propelled silver to historic highs in the past. But this time, there's an added twist. Industrial demand for silver is at an all-time high, driven by the green energy revolution and advancements in technology. Combine that with dwindling silver supplies, and you've got a setup that could lead to an even more explosive rally. If history is any guide, we're standing at the edge of a silver surge. But the question remains, will you be positioned to take advantage of it when the time comes? In the next segment, we'll analyze the current silver market trends and why analysts believe we could be looking at $36 per ounce, or higher sooner than you think. And before you go, I want to know, do you think silver will break its previous highs, or will history take a different course this time? Share your thoughts in the comments, and don't forget to hit that subscribe button to stay ahead of the curve.
This chart shows a growing number of billion-dollar natural disasters. And clearly, the number are increasing. And, you might infer from that, well, that's climate change. But you don't need human-driven climate change to get a chart like this. All you really need is inflation that isn't adequately reflected in the official numbers, like you said, and more people moving into disaster-prone places. Because, there have been natural disasters since the beginning of time, but they weren't billion-dollar natural disasters because we didn't have $1 billion worth of property in those places. Now, the more people we put there, the more houses we build, the more cars, expensive cars, in the case of Southern California and South Florida. In other words, the more expensive property that we put in the way of these disasters, the more billion-dollar disasters that we have. So, it's important to look at why these things are happening. And if you look at, for instance, the frequency of hurricanes that touch the U.S., they haven't really risen over the past 100 years. Same thing with wildfires. The acreage burned in Southwest wildfires is actually going down. Well, it's actually going up lately in the last decade, but it's gone down dramatically in the last century. So it's not like there are more natural disasters. The important thing to understand is that these natural disasters are more expensive because we're putting ourselves in the path of them. And I think that's the big public policy mistake. Well, the two, obviously, inflation is a horrendous public policy mistake, but tens of millions of people moving into the path of natural disasters is inherently super expensive. And that's what we've been doing. So it isn't clear how you reverse this trend because, it's not like 10 million people are going to move out of California. Some people are moving out of California, obviously, and the stuff that's happening now will cause more people to move. But that's a multi-decade process to get back down to where we were in, say, the 1950s in Southern California. And people are still moving into Florida really aggressively. So that trend hasn't even plateaued yet. It's going to, because Florida is perceived to be a more successful place, and it is way better run than California. There's no doubt about it.
Let's shift our focus to what's happening in the silver market today and why experts believe we're standing at the precipice of a historic rally. Over the past few months, silver prices have been making headlines, recently breaching key resistance levels and holding strong above $30 an ounce. This marks the first time in over a decade that silver has seen such momentum, and analysts predict it's only the beginning. One of the biggest drivers behind this surge is demand. Industrial use for silver is at an all-time high, thanks to its critical role in renewable energy and high-tech industries. Solar panels, for example, are now one of the largest consumers of silver globally, and as governments push for greener energy, demand is set to skyrocket. Add to that the growing need for silver in electric vehicles, 5G infrastructure, and medical technologies, and you have a recipe for sustained industrial consumption. But it's not just industrial demand. Investment demand is surging too, as more investors turn to silver as a hedge against economic instability and inflation. And here's the kicker: the supply side isn't keeping up. Mining output from major producers like Mexico, Peru, and Australia has been under pressure due to operational challenges and declining ore grades. This imbalance between rising demand and constrained supply is pushing silver prices higher, with no signs of slowing down. Another key factor is the weakening U.S. dollar. The Federal Reserve's hawkish stance has propped up the dollar in the short term, but ballooning government debt and the risk of a prolonged economic slowdown are casting doubts on its long-term strength. When confidence in fiat currencies falters, precious metals like silver become an obvious safe haven. And let's not forget that central banks around the world have been quietly stockpiling gold and silver, signaling that even the institutions in charge of fiat currencies are hedging their bets. To add fuel to the fire, premiums on physical silver products, like coins and bars, are climbing as retail investors rush to secure their holdings. Some dealers are reporting record low inventories, and the demand for physical silver is so strong that premiums on certain coins are hitting historic highs. This is a classic sign of a market heating up. So where do we go from here? Analysts are now eyeing $36 per ounce as the next major target for silver, with some even suggesting that triple-digit prices could be within reach in the long term. The question isn't whether silver will rise, but how fast and how far it will go. In the next segment, we'll dive into expert predictions and analysis from key figures in the market. What do they see happening, and how can you position yourself to benefit? And while you're here, let me ask you this: do you think silver's industrial demand or its safe haven status will play a bigger role in driving prices higher? Drop your thoughts in the comments, and don't forget to subscribe for more insights on the silver market's incredible journey.
And that have to be profitable eventually if you want to keep them. And inflation is devastating for that whole concept of future certainty of income streams. But civil unrest is a big deal too, and natural disasters are a big deal. And we're handling all of it so badly that you put it all together, and what we would like to think of as a free market society based on private property and individual choice just doesn't work anymore. So that is a broader, longer term critique of what's going on out there. But it's a real one. Things are getting worse instead of better from the point of view of entrepreneurs. And if those guys shut down, job growth stops. And then you have a society that just doesn't work at all. If we don't have a robust jobs market, we have a chaotic political system. And if we have a chaotic political system, we have a broken financial system at the upper levels. And it all feeds into basically the same process of us getting worse and worse at doing important things. We're losing confidence in our ability to create wealth. For a lot of different reasons. But it all points towards an economy that doesn't work, doesn't generate enough tax revenue, doesn't generate enough personal income, doesn't generate enough capital flowing into the financial markets. And so, to put it in a very general sense, we're starting to look like Europe. Europe is a mess because they've made some very fundamental mistakes, different mistakes for each country, but all accumulating in a sense that the EU might not even be able to hold together going forward. And, sometimes in the U.S. we're smug about us being better run than lots of other countries, but that's not always the case, and it's increasingly not the case at all that we're well run. So,
now that we've explored the forces driving silver higher, let's turn to the experts who are sounding the alarm and the opportunity on what could be a historic breakout for silver. Analysts across the board are issuing bullish forecasts, and their reasons are rooted in undeniable market fundamentals. Take John Rubino, the founder of DollarCollapse.com, for example. He's been closely following the growing strain on the financial system and has a bold prediction: silver could reach triple-digit prices in the not-so-distant future. Rubino argues that as economic instability deepens, whether it's from a collapsing insurance market, skyrocketing national debt or runaway inflation, precious metals will become the ultimate safe haven. Silver, being far more affordable than gold, could see a surge in demand that sends prices soaring past $100 an ounce. It's not just a hedge, he says. It's an opportunity to profit from the chaos. But Rubino isn't alone. Kitco, a trusted name in the precious metal space, projects that silver could average $36 an ounce by the end of the year. This isn't just speculation. This projection is grounded in hard data like supply shortages, surging industrial demand, and the fact that silver has already hit its highest levels in nearly 12 years. According to Kitco, once silver breaks through resistance around $36, we could see a rally unlike anything in recent memory. Even institutional players are taking notice. Central banks, which traditionally focus on gold, are quietly adding silver to their reserves. Why? Because they recognize that as the green energy revolution accelerates, silver will play an indispensable role. When the world's largest financial institutions start stockpiling a commodity, it's a clear sign that the smart money is positioning for a major move. Let's not forget the perspective of retail investors. With premiums on silver coins and bars at historic highs, it's clear that everyday investors are already moving to protect their wealth. Some experts believe this retail-driven demand could cause a supply crunch, further accelerating price increases. But here's the twist. The gold-to-silver ratio is still well above its historical average, signaling that silver remains undervalued compared to gold. This means that silver has far more room to grow, potentially delivering larger returns than gold as the market corrects. As one analyst put it, silver isn't just following gold, it's carving its own path upward. So what does all this mean for you? The consensus among experts is clear. Silver's time is now. Whether you're looking for a hedge against inflation or a way to capitalize on the next big rally, silver is positioned to be a top performer in the coming years. But what do you think? Are these experts onto something? Or are their predictions too optimistic? Share your thoughts in the comments below, and stay tuned, because in the next segment, we'll discuss actionable strategies for preparing yourself as silver's momentum builds. Don't forget to hit that subscribe button. You won't want to miss what's coming next.
Is a big part of the real estate story, because we basically we came down on a side in those riots, and it was the side of the rioters, which is to say the side that is opposed to small businesses in a lot of towns. And insurance companies are watching this, and they know that there's always something going on that could lead to civil unrest in the U.S. We're a deeply divided society in which a handful of people have most of the wealth, and the vast majority of other people are frustrated, and so they can take to the streets at any time for many different reasons. And if you're trying to insure a small business that's at street level, for instance, your policy has got to be becoming more expensive, right? Because the insurance companies, they're looking at this and they're thinking, wow, okay, what happens when there's the next police shooting, or the next contested election, or the next war where body bags start coming back and people don't want to accept it? And there are lots of reasons for people to hit the streets. And the government has shown itself to be unwilling to protect property at the expense of the rioters. So yeah, that's another thing that makes it hard to manage a business and manage property and insure it in a way that it's profitable. Unless you have ironclad guarantees of protection and insurance and manageable prices going forward, capitalism doesn't work. You need certain kinds of certainty in order to convince entrepreneurs to put themselves on the line and put their capital on the line to start businesses and run businesses that won't be profitable at first.
All right. So we've talked about the forces driving silver higher and the expert predictions pointing to massive gains. Now, let's get practical. How can you prepare to take advantage of this opportunity before it's too late? The first and most straightforward strategy is investing in physical silver. Silver coins and bars are tangible assets you can hold in your hand. No counterparty risk, no third-party involvement. Think of them as your personal financial insurance policy. Popular options include American silver eagles, Canadian silver maple leafs, and even junk silver pre-1965 U.S. coins with a 90% silver content. These are widely recognized, easy to trade, and currently available at premiums that, while rising, are still historically reasonable. And here's a pro tip. Act sooner rather than later, because as demand spikes, so do those premiums. Next, consider silver ETF, exchange-traded funds. If you're looking for a more liquid option, ETF like SLV allow you to gain exposure to silver's price movements without dealing with storage or shipping. However, remember that ETF are paper assets and don't offer the same level of security as physical silver. Still, they're a great way to ride the market's momentum, especially if you're just starting out. For those with a higher risk tolerance, mining stocks offer another way to capitalize on silver's rally. Companies like First Majestic Silver and Pan American Silver are positioned to benefit directly from rising silver prices. When the price of silver jumps, these companies often see exponential gains due to their operating leverage. But be cautious. Mining stocks come with additional risks like operational challenges and geopolitical issues, so do your research. Another option to consider is diversification through silver-backed digital assets. Platforms like Gold Money and others offer digital ownership of silver stored in secure vaults worldwide. These allow you to own silver without worrying about physical storage, and you can even convert your holdings into physical silver if needed. And don't underestimate the importance of timing. The silver market moves fast, especially during periods of economic uncertainty. Right now, with silver holding above $30 an ounce and expert targets at $36 or higher, the window to enter before the next leg up may be closing. But here's the good news. Historical patterns suggest that even if you miss the first move, there could still be significant upside as the rally progresses. Lastly, keep educating yourself. Markets are volatile, and staying informed is your greatest asset. Follow credible sources. Watch for key price levels like $31.63 and $36, and keep an eye on broader economic indicators like inflation and the strength of the U.S. dollar. Remember, silver's rise won't happen in isolation. It's part of a much larger story of financial instability and growing demand for hard assets. So what's your next move? Are you ready to start stacking physical silver? Or are you leaning toward ETF or mining stocks? Let me know in the comments. And don't forget to subscribe for more actionable insights as we dive into the final piece of the puzzle. Why silver's potential isn't just a possibility. It's becoming a necessity in today's chaotic world. Let's not forget the perspective of retail investors. With premiums on silver coins and bars at historic highs, it's clear that everyday investors are already moving to protect their wealth. Some experts believe this retail-driven demand could cause a supply crunch, further accelerating price increases. But here's the twist. The gold-to-silver ratio is still well above its historical average, signaling that silver remains undervalued compared to gold. This means that silver has far more room to grow, potentially delivering larger returns than gold as the market corrects. As one analyst put it, silver isn't just following gold, it's carving its own path upward. So what does all this mean for you? The consensus among experts is clear. Silver's time is now. Whether you're looking for a hedge against inflation or a way to capitalize on the next big rally, silver is positioned to be a top performer in the coming years. But what do you think? Are these experts onto something? Or are their predictions too optimistic? Share your thoughts in the comments below and stay tuned, because in the next segment, we'll discuss actionable strategies for preparing yourself as silver's momentum builds. Don't forget to hit that subscribe button. You won't want to miss what's coming next.
Yeah. The systemic financial collapse would happen like this. People are so traumatized by what's happening with their homeowners insurance that they pull back on spending. That slows the economy down, tips it into recession. And there are so many overleveraged sectors out there that a recession leads to a brutal equities bear market, maybe a banking crisis. You and I have talked quite a few times about commercial real estate tanking, especially office buildings, that impacts local and regional banks and leads to a run on the several thousand local and regional banks out there that hold a lot of commercial real estate paper. That forces the government to bail out this big sector, and then people see another multi-trillion-dollar bailout. And remember what happened in 2022 when inflation was almost double digits, or actually in real terms was definitely double digits. And then they act accordingly. They sell their bonds. They shift into real assets that causes inflation in that sector. And then this recession and bear market metastasize into something like the Great Depression, or something like the early stages of Weimar Germany, where government's bailing out everybody in sight with newly created currency, tanks the money, and drives everybody's cost of living up. That's when you get into really serious financial crisis territory, because it's not clear at that point what is the fix. If bailing everybody out makes the dollar tank, then how does the government fix that? They've got to raise interest rates to protect the dollar, but then that craters a bunch of other overleveraged financial institutions, which forces another bailout, and at some point people just give up on the whole process. And I think that's what we're risking right now by borrowing as much money as we're borrowing. Government debt is going parabolic. It's straight up. September and October were the two biggest Septembers and Octobers for government debt ever. And this is not we're not at war or anything. We're not in any kind of a crisis. We're in, more or less peacetime. And we're still running these kinds of deficits. So we're taking ourselves in the direction of some kind of a gigantic financial crisis. And then, as we started this talk, it just becomes a question of what the catalyst is. And it could easily this time around be insurance.
So here we are. The perfect storm is brewing. The collapse of the insurance industry, the ripple effects on the real estate market, and the broader economy are setting the stage for something we've seen before, but on an entirely new scale. But this time, the stakes are higher, the risks greater, and the fallout potentially more catastrophic. And through it all, silver stands poised to shine like never before. Here's why. When faith in the financial system crumbles, investors run to safe haven assets. Gold often takes the spotlight, but silver offers something unique. A combination of industrial necessity and monetary value. With industrial demand surging due to advancements in green energy and technology, silver's role as an essential commodity makes it irreplaceable. Add to this the dwindling global supply and the persistent undervaluation compared to gold, and it becomes clear why silver's trajectory could dwarf previous rallies. Let's not forget, history is on silver's side. During the economic crises of the 1970s, 2008, and even the early days of the pandemic, silver delivered staggering gains, often outpacing gold. And in 2025, with inflation remaining stubbornly high, geopolitical tensions rising, and the U.S. dollar under increasing pressure, the stage is set for silver to do what it has always done, thrive in chaos. But here's the key takeaway. It's not just about profiting. It's about protection. Silver isn't just an investment. It's a hedge, a lifeline, and a store of value in a world where fiat currencies and financial systems seem increasingly fragile. The insurance meltdown is just one piece of the puzzle, but it's a critical one. It's a warning sign of deeper systemic issues, and if history is any guide, those who prepare now could not only weather the storm, but come out stronger on the other side. So the question isn't whether silver will rise. It's whether you'll be ready when it does. Take action now. Explore your options. Whether it's stacking physical silver, diving into ETF, or exploring mining stocks. And remember, the greatest mistake isn't being too early. It's being too late. If this resonates with you, make sure to subscribe to stay ahead of the chaos. And drop a comment below. Do you think silver is the ultimate edge for what's coming? Or is there another asset you're betting on? Let's get the conversation started. As always, this isn't financial advice. Just a reminder to stay informed, stay prepared, and stay ahead.